Good morning, everyone. So I wanted to get into an adjustment here for our iron butterfly. We put this butterfly on just about 4 or 5 days ago. When this butterfly went on, it was negative delta. It wasn't quite this negative delta, but it was negative delta. And the goal or the thought process at the time was that the market was either going to stall around the current price when we put this on, which was around the center of this butterfly, or around 380 range. So our thinking was that the market might stall there and this would just decay in that window. Or the other thing we thought about was that maybe it'd even pull back a little bit, and with this position being a little bit negative delta, those would have been good things for us. Of course, that's not what's happened. If we take a look at our market here, we can see that since we put this trade on, which was right here, the Qs, and again, we were thinking, or my thought at the time was that, we would probably pull back a little bit, but we've just done nothing but rocket higher since then. We've gone up from, 378 almost to 388, so almost 10 points in the Qs in 4 days. We're also here on the S&P futures. We made new highs already today. The market's only been open a half hour at this point. That's also a very bullish sign. Another bullish sign here, if we look at our volume on any given day, we are seeing that on our up days, we've got higher volume than what we've had on a little bit of a down day, if you even want to call that a down day. I don't know that I would, but so our up days have had more volume, which again is also a bullish sign. So a lot of things here are pointing to bullish signs. As a result of that, I can't really sit here in this position, because while right now theta decay is still working slightly in my favor, if I march time forward here, we're going to get to a point about here where theta goes against me, and it goes against me very, very quickly. So at this point, if I don't do anything with this trade as we get to expiration, I'm going to lose $650 in this trade. Now, if I have an opinion that the market is going to pull back into this, 382 down to, maybe 372 range in the next week or two, a case could be made just to leave this on, just let it do its thing. However, that's not my opinion anymore. My opinion is that we have broken out, the market's moving higher. While there may be a little bit of a pullback somewhere here along the way, I don't want to necessarily take the risk that it's not going to happen, particularly with as bullish as we seem to be. So our couple possibilities here. One was, well, we could have, at the start of this, we could have bought a long call, but we couldn't really buy one. We were having to buy a long call all the way up here at 402, which still would give us a very large valley of death here where that would decay. Let me just show you what that might look like real quickly here. So if I came up and I added in a long call, let's see, we're going to buy a call at 402. This is showing buying 10. Obviously, we're not going to buy 10. So let me adjust this back to just 1. I have to unlink this and make this just 1. We would end up still with something like this. And if we shrink this down, we can see that eventually we get to profitability. Now, this is not accurate here. Let me refresh this. There we go. Eventually, we would get to some level of profitability on that trade. Let's include that again. But, we got to get all the way up here to 390 or so before that would happen. And if we march this forward in time, if we don't get up, way up here, we're still going to decay in this valley of death. And we lose more money because we spent money on that long call, and that long call never really became worth anything. It never got into the money where it worked in our favor. We can also see by adding that long call, theta is hard against us right now even. So having that long call in there ultimately would not have really been very helpful in this particular case. So, what is our objective here? Well, the objective from my perspective is to change our position to where we get it centered or somewhat over our current price. In other words, I want current price to be under a tent of some type. If it's under that tent, theta will continue to work in our favor. Where again, if we're outside the tent, theta might be working in our favor now, but at some point it'll start turning against us. So that's my objective. I can do that a couple different ways. I can totally close this butterfly and I could just move it to the current market point of 387 or something along those lines, knowing that I'm starting $90 down when I do that. However, when I put this trade on, I sized it in a way that I was prepared to add to this trade personally. Again, this is a paper trade. Let me be clear on that. But I decided to put this trade on small so that I'm comfortable adding to this trade if I wanted to. So how would I add to this trade? What could I do? Well, my goal is going to be to create less upside risk. I'm willing to take a little more downside risk in this trade, and I want to get it centered under the tent. So I'm going to pause here for a minute and set that up so that you don't have to see all the gyrations on that, and then I'll walk you back through exactly what I do. Slight change of plans. I'm actually going to do this and show you the process that I go through. I figure everybody needs to know this anyway. So basically what I want to do is I'm going to take these 380 short puts. Now I'm very profitable in these 380 short puts at this point. Again, because I sold these for $6.22. I can buy them back now for $3.35. So what I'm going to do is I'm going to basically roll these up and now create short puts up here at I'm going to use 386. I don't know the exact number yet, but we're currently trading right around 386. So if I sell those at the money puts, that's going to bring me the most credit for those. So I'm going to sell puts, and I'm going to sell those at 386. Now, I've got to come in now and I've got to close these. So I'm going to buy these to close. Okay, so that's step one, is I bought these to close. I rolled them up to 386 here, okay? Now, the next part of this that helps me a little bit, I mean, it gets me to a position where now if I decay, if you look at this dashed line, this is going to be nice. This is going to decay greatly in my favor. But you can see that exact position gives us a lot of downside risk, way more than I want. And of course, this is going to be a positive delta position, big positive delta position with 125 positive delta. So this is a directional trade now. If you have an opinion that our market is going to remain bullish, this could be a good position to be in. But again, it has significant downside risk if you're wrong. That's not the way I personally trade. I don't trade very directionally in most cases. I prefer to be delta neutral in most cases. So in order to be delta neutral, I also now need to move up my long calls. So let me just come in here. We're going to buy calls, and I'm going to buy those. I'm going to go about the same. I'm going to go 390. Okay, so now I'm going to come in and I'm going to sell these 385. So let's just sell to close those. And you can see we've moved this to essentially an iron condor type of position where we are not centered, but we are underneath the tent. So let's look at what this did for us. This dramatically flattened our delta. Remember a moment ago we had very high delta after we made this first move. We had 125 delta. Again, if you are a directional trader and you had a strong conviction the market was going to go up, that's a good position to be in. I'm a delta neutral trader. I tend to try to trade the ranges in the market, which is my goal and objective. So I'm coming in here and I'm now counting on theta decay to happen over the next few weeks to where my T0 line moves up here into a profitable state for me. Now, what did I do here? I did pick up additional downside risk, quite a bit of additional downside risk, in fact. I have to be comfortable with that. Again, that means that the Qs, I mean, if they pulled back quite a bit here, I could get into a little bit of downside trouble in that particular case. So, but for right now, I'm just basically looking to let the market chop back and forth in here. I do still have some upside risk, but you see that I set this up with less upside risk than I did downside risk. I did that by design because our market is working its way higher more so than it is working its way down at this point. So anyhow, that's kind of my game plan right now. That's why I changed this the way I did. I just wanted decay in this particular range. One of the things that I did not do, you can see we jumped to a 350 negative delta here. I did not look to see what the actual price was on these. The bid-ask spread was fairly tight there, so that should not have impacted me very much. And let's see. And our price is 489 here, 563, 566, so that's not bad. I need to see what we closed these guys out for, 339, and so yeah, so here's where something, and when you do this, if and when you get to the point of trading live, again, you should not be doing that right now, but if and when you get to the point of trading live, make sure you're plugging in your correct prices here, because you can see that for a momentary second, just a split second there, something happened to the bid-ask spread that kind of made this close price out of whack. And that's what took us from, we had been down about $110 to down $460. There was an incorrect number that got picked up here. This is not a fault of the software. This is just a fault of a momentary glitch in the bid-ask spread, or a momentary widening of the bid-ask spread. So I'm going to reopen this trade and just come back in and close it again. And this time I'll make sure that I close it with a valid number. So we're 749 to 752. Again, we'll go ahead. We're selling this to close. So the worst case scenario is, see, it just did it right there too. It just changed. But we'll go ahead, close this at 749, which is the ask on this one. A case could be made that it should be in the middle there somewhere. And we can see that that instantly put us right back to where we should be. So that was actually a good lesson. Under normal circumstances, if I were trading live, I would make sure that I've plugged in my actual live dollar amounts. But again, here I was just kind of clicking and closing, and got caught by that momentary lapse in the bid-ask spread. So that's something to always look for as well. If you're doing this and you see an anomaly, something that's like, well, wait a minute, why did that jump to a much more profitable number or a much more negative number? Those should be a red flag, and you should go back and take a look and see exactly what happened. So now that we've got all this dialed in to being in a range here, a pretty wide range. I mean, our break even on this can go all the way up to about 390 in the Qs, and all the way down to, you know, 376. So that's a pretty good range. If we can stay in this range, we've only got, let's see, this trade expires in 17 days. So, you know, 7-10 days from now, if we stay in this general range, this trade should be hitting some profit where I'd look to take it off. So this is part 2, if you will, or adjustment trade number 1, actually, on this QQQ trade. I'm going to go ahead and I'm going to save this trade now. And we'll save it start to finish, iron butterfly, and I'll call this adjustment 1. And unfortunately, in our current market conditions, it's not out of the question. We might have to adjust this again. I hope we don't. Every adjustment eats into your P&L because you're paying more commissions, and there's usually slippage between that bid-ask spread. So the less we can adjust a position, the better. In most of my delta neutral trading in a normal market, 60-70% of the trades I put on, I'll pull off without ever putting an adjustment on them. You know, the market will just decay in the wide range that I've defined in my trade. In the market like we're having right now, we're kind of chasing our tails here. We put on something thinking the market's going to stay in a range. It doesn't. It blows through that range, exactly like what we did here, and then we're having to come in and adjust this trade. So that's how we would adjust something like this, and I will put the copy that link and share that as well. And that's it on the adjustment of our QQQ trade. Oh, look, it's decaying fast enough right now that we actually went from $100 down to about $20 up. Again, when you've got that much theta decay, now we have $30 a day. That is a theoretical number. It is an approximated number using options modeling, but when you got that higher amount of theta, a position can return to profitability faster than had it been still outside that tent and we're waiting for it. So again, hopefully that made sense to everyone. As always, please like, subscribe, and if you have any questions or comments, drop them in below. I always try to take a look at those and respond to people when I can. Take care, everyone.